All right, guys. So this is another one. Okay, so you learn a lot from these videos. Just make sure you watch to the end. You can see we are milking VIX 51s, and this trade was I actually took the first couple of positions. I think I took like two positions here first, and then I was hoping for price to just drop immediately, but that didn't happen as price started dancing around this entry for a while, and then sorry, this was my first entry. Yeah, this was my first entry, and the price had started just dancing around, but I knew that was going to happen. So the entry here was I think I took just two entries here and I added more around this level. Yeah, so price just started dancing around, and then the good part is, yeah, we are in profit right now. We are in good profit right now. My VIP members are milking already, so I'm going to be showing you guys how I came up with the decision to sell this trade. If you are looking at it, it's looking as if the market is in an uptrend. You can see the higher highs. You can see the market looking like it is in an uptrend. Now this video is for the sake of this particular person that dropped a comment on one of my channels. I think that was my Telegram channel. This is just going to clarify why you should always be trading. You should always be analyzing the market on a higher time frame and taking your trade on a lower time frame. Okay, so the person probably must have been looking at the lower time frames and trying to get the direction of the market on a lower time frame. But the thing is, when you are trading on a lower, when you are analyzing the markets from a lower time frame, you don't get to see the bigger picture. You don't get to see what is happening on the higher time frame. Now, what I like to tell my students is, if you are to make inquiries from people, let's say you are in a marketplace and you want to find out about prices of stuffs in the market. Yeah, you want to be asking somebody who has spent a lot of time in the market, right? Let's say you have somebody who has spent a whole day in that market, or you have somebody who has spent just let's say you have somebody who has spent up to 4 hours, and you also have somebody who spent just barely 30 minutes or 15 minutes in the market, right? Such a person won't give you as good information as people who spend more time in the market, right? So that's why it is always important for you to look at the higher time frame. Now you can see that the market is going in another direction. This is because the higher time frame was signaling a sell. The market in a higher time frame was a downtrend, while the lower time frame was busy pulling back, going upwards, tricking people, making people feel like the market is buying. The higher time frame was actually signaling a sell. Okay, it was actually signaling a sell. So I'm going to quickly just update my VIP members on the progress of this trade right now. Sorry about that, guys. So I'm just going to update them on the progress of this trade. You can see this is where we at. This is the last screenshot I shared on the group. So I'm going to quickly just share, update them, and I'll get back to complete this video, guys. All right, so that is so yeah, I was able to already understand the direction of the market looking at the 4 hours time frame. I had seen the let's go to 4 hours though. All right, I had seen that price had come to a very clear resistance level. You can see this point, price had reversed around here, and then price came back to that same point around here, guys, and it started pulling back. Okay, it started pulling back. Now if you go back in time, if you get to back test, you will realize that around that level there was a lot of price reaction. You can see there was a lot of reversals, all of that. There was a lot of reactions around that level. If you go back, you keep seeing price pulling back right at that level, right? So that level is a very solid level. That is a level where every good trader would be looking out for trading opportunities. And price had come back to that level. Now this is still that level, guys. This is still that level we are looking at right here. All right, so on the higher time frame, you can see that price had been on a downtrend. You can see that, yeah. This is a clear downtrend, guys. This is a very clear downtrend. Price had come price had been dropping all the way down. Now if I place my horizontal line like I just did, you can see there's a confluence around this level. You can see the confluence around this level. All right, you can see the confluence around that level where I actually placed my sell positions. All right, that's where I placed my sell positions. And then you can see that we are winning. This is our target, guys. This is our target. This is our target. This is the first target. This is the second target. And price just might pull down all the way to this level. All right, but you know how the market works. It doesn't go all the way down. It has to create the swing highs and lows and all of that. Now those swing highs and lows should not discourage anybody who has already seen a clear direction, right? Anybody who has a clear direction of the market should follow it and reach their destination. Okay, so you don't need to be discouraged by the swing highs and lows and all of that. That's just the way the market moves until it gets to its destination. But for the purpose of this trade, for the sake of this analysis here, we want to be exiting the market around this point after we have taken the first profit around this level. We want to take the second profits around this level, and we are good, guys. So like I was saying, you need to be sure of the direction of the market on a higher time frame. All right, somebody asked why the market would be going up in a certain time frame and going down on the other time frame. Now this is why that happens. Like I tried to explain earlier, the market will always create the swing highs and lows and all of that before it gets to its final destination. Okay, so you don't expect the market to just fall all the way down like raindrop, right? You don't expect it to just pour all the way down. You will not be able to find you will not be able to see the areas where you want to be trading from if that happens. You'll not be able to see your support levels, your resistance levels if that happens. You'll not be able to see the structures to base your SL and your TPs if that happens. Okay, so what you should do is ensure to follow the market on the higher time frame first, right? Look at it on the higher time frame, see what happens on the higher time frame. Have the higher time frame at the back of your mind while you go down to the lower time frames to see what is actually, if what you have in mind or what you pictured on the higher time frame is actually playing out on the lower time frame, guys. You can see it's still playing. It danced around a little around the entry before it finally dropped in profit. A lot of people would have panicked out of the market, probably with small profit or with no profit at all, or with small loss, right? But knowing the direction of the market, I was able to just hold the trade and then allow it to run all the way to this level. Right now, if I close at this point where it is right now, I have made more profit than somebody who had panicked out a long time ago, right? But I'm not closing just now. I'm not closing just yet. I still have a long way to go. I know the market is still going to be coming down to somewhere around this level, right? So I'm good. I just want to keep holding. Highest I'll do, the least I'll do is just make sure that I trail my SL when it keeps going down. I'll trail my SL so that if eventually there is a pullback and I don't want to keep trading this particular market, then the market will hit me out automatically. I mean, the trade will exit itself automatically, right? So it's okay to always trail your SL according to how the market is moving and then secure your profits, right? So this is very easy. When you picture the direction of the market on a higher time frame, the next thing you'll be looking at for is the candlesticks. All right, so for the candlesticks, you want to be seeing the bearish signals, right? You don't necessarily need to know the names of every candlestick that represents a bear market. All right, you don't also necessarily need to know the names of every candlestick that represents the bull market, right? But if you see something like this, if you see something like this candlestick I'm pointing out right now, if you see this red candlestick, you can see this is what I'm pointing at. Don't know if you guys can see that. I hope you do. But this candlestick, if you see something like this on your strong resistance zone as the one here, your strong resistance zone is the one you identify on the 4 hours time frame. So if you see on the 4 hours or the higher time frames, yeah, so if you see something like this and you probably count more of the bearish candlesticks, more of the red candlesticks than the green ones, that's more of the bearish candlesticks than the bullish candlesticks on a time frame, I mean on a zone like this, a key zone, a key resistance zone, then you know that the market is going to be respecting your sell signal, especially if you have a confluence just like I did have here on the 4 hours time frame. You can see I have my trend line and my horizontal line come together to tell me, yo, this place is a solid resistance level. You can also see that every time price comes to that resistance level, it usually just drops from that level. Okay, every time price comes to that place, it usually just drops. All right, you can see even around here, even when that level was serving as support level, you know, resistance can become support, support can become resistance. Yeah, so even when it was serving as as support level, whenever price gets to that level, it usually just bounces back upwards. Okay, so that means that level is a strong level and price would always react around that level, and that reaction is what you want to see. That's what you want to see for you to base your entries on, right? And then after you've spotted all of this on the higher time frame, you just need to switch to the lower time frame and then look for entries. How do you look for entries? You look for bearish signals on those other lower time frames. Okay, so I'm going to update you guys on more of good strategies on how to milk a lot of profits from the market and take win a lot of profits, right? Win the market for yourself every single time that you trade. All right, 90% of the time you could be winning if you follow these instructions that I'm sharing on this channel faithfully. So make sure you sign up, make sure you subscribe to this channel and turn on your notification bell. Make sure you like this video so that it can go around. Every other person who might need this information will get to see it, and of course take advantage of them. Thank you guys. I'll see you guys on another video. Okay.